Good morning, traders. I'm Joe Malandrino, Global Markets Reporter at Nasdaq, and today we are going to speak with Steve Quirk of TD Ameritrade. Steve, thank you as always for joining us at MarketSite, and it's time for the monthly Investor Movement Index reading for June. And I'll tell you what, this has got to be the biggest percent jump since I've been covering this.
Yes, it is the biggest percent jump, and we're actually at the highest level as well. So, for the first, in looking at the last 6 months, first half of the year, we've had steady growth in clients gaining exposure in the market to this point, and now we sit just below all-time highs. So it's really quite a sign of optimism with respect to the economic conditions.
And it was interesting to see that we actually got some volatility in June as well.
We did.
And see people still buying into the market. So it's almost the premise of, the trend is your friend, and this is what the market's giving you. So keep doing what's working until it doesn't work anymore.
Right. Yeah. And I think what you see, and again, we're in an 8-year bull rally, and it's worked very effectively for 8 years. When there have been dips in the names that they really want to get more exposure in, they take that as an opportunity and say, hey, Apple at this level, I'm a big fan of Apple at this level, and they'll scoop it up and then reallocate as that gains, has some gains.
Well, it seems as if the usual suspects were the top buys as well.
Yeah.
And very defined categories. You have your more millennial-focused tech names, if you will, and then your big dividend payers.
Right, right. I mean, with the Treasury yields the way they are, you look at the generation of investors that have been around a while, and they just do a comparison and say, look, if I can get double, the 10-year in a dividend, I'm probably going to do that with some percentage of my portfolio. Whereas when you look at our millennials, they say they're not quite as interested in that. They're more interested in the Teslas, the Amazons, the Facebook, the Apples that are seeing this really nice growth, the Netflix. So
right. Well, it's indicative of the stock price as they're trading, or they were trading at 52-week highs. So again, that's where that trend is helping you.
Right.
But let's go to the sells. And again, some of the same usual suspects. The banks were being sold, even with interest rates moving higher. I thought that was interesting.
But you know what? I mean, it seems if I look at the last year on the financials, they've been the one that I would say is most interesting to me in our client segmentation and what they do with them. They actually will purchase them, hold them, and then wait for this, sign that interest rates are going to, we're going to have a move, or we're going to have some improvement in that rate environment. And then the stocks rally immediately, and they'll roll out of them. And if you look at what's happened over the course of the last even couple of years, we have expectations that the 10-year is going to be at 4, and then it's all of a sudden last year at 1.3. So that's been pretty effective for them. I think what's changed in terms of the way that people invest today is a lot like a lot of the things that they do in general. What I mean by that is, the younger generation today is not expected to work at one company for the rest of their life. The younger generation today is not going to buy IBM and hold it the rest of their life. They're going to say, look, I can very easily move in and out of this stock as in conditions get better or deteriorate, and move into something else that I think is going to perform better.
You're certainly seeing that with the millennial investing trends. They certainly are more aggressive than we are for sure. So let's talk about your second half outlook for 2017. Do you think we're going to continue with this momentum, or at least stay where we are, or do you think a pullback is in the cards?
If you look at the way that that even our index has worked, it's been, when you see this kind of engagement, usually that kind of carries through for a period of time. Now, that's not to say if there is something catastrophic that happens, it doesn't change, but I would anticipate that this optimism will continue to go. Now, will it move it at the pace that we just talked about? Probably not.
All right. Well, thank you very much, Steve, for joining us.
Thanks for having me.
And traders, thank you for joining me. I'm Joe Malandrino, Global Markets Reporter at Nasdaq.